This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September the 10th, 2015. Our time is 8:44 Mountain. Our radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. If you ever miss a radio show, we have the shows streaming, archived, at Harold's two websites, HESradio.com, rarecoloreddiamonds.com. And remember, we have a companion to our radio show. It's our free weekly newsletter. If you would like to get our newsletter free of charge sent to you, read all the material that Harold and I are seeing, being on the same page with us, you can connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, or call 1-800-432-1022. 1-800-432-1022. And for those that like to take their radio and be portable with it, we have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find our podcast there. Our show is portable. We go anywhere your portable device does. Now this week, from rarecoloreddiamonds.com, we have an absolutely beautiful featured diamond. It's a big diamond. It's a 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless. If you would like to see it, go to Featured Diamond of the Week at rarecoloreddiamonds.com, rarecoloreddiamonds.com, and see this beautiful 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless. And we had the long weekend last weekend. Hopefully everyone had a nice break and all the kids back to school now. And Harold, we're starting to see the markets more normalized because all the traders are back. People are back from the holidays. And we saw volatility in August. More than likely, we will continue to see volatility in September and October as there's many economic events coming up, as is the case here in the next few weeks. Will the Fed raise interest rates? That is the big question. But Harold, more than likely, more volatility on the way.
Well, there has to be, Randy. Again, these markets are so unsettling at this particular point because almost every sector has got problems. And when you look at what's happening in China, that's definitely got a short, medium, and long-term effect on these markets. Look at the U.S. and Canadian stock markets have dropped substantially. The Dow Jones is down to 62.34. It's down another 20 points today. It opened up on Wednesday substantially higher and finished down over 200 points on the day. I've got a client in China that's been trying to get his money out of the Chinese stock market for almost 2 months now. That's how terrible things are there. I've got a very good client of mine from Greece, and he's saying that all of his relatives and all of his family are suffering tremendously there, and things are going horribly in Greece and in other parts of Europe. At this point, look at Canada. I mean, you know, I'm Canadian, proud to be. Randy, you're Canadian. Most of our listeners and clients are Canadian. It wasn't that long ago that the Canadian-American dollar were even. In fact, the Canadian was stronger than the U.S. dollar, and now that has changed by over 30%. And going to continue to widen because the Canadian dollar is basically tied into oil and commodities and oil are in a downturn at this point. So unfortunately, I see a substantial drop still coming in Canadian currency, and I see the biggest upside in currencies being the U.S. dollar. Even though things are not great in the U.S. and there's a lot of problems that are going to arise, you know, down the road type of thing, but at this particular point, it's the U.S. dollar that's a strong currency, and that's where most of the investments are. And I do recommend to my clients in Canada that, you know, we definitely get some investments out of Canadian dollars and into U.S. dollars because we're going to see a massive rally coming in the U.S. dollar, especially if they do cut interest rates in September. If they do, even if it's by a quarter of a point or something like that, you will see the U.S. dollar strengthen even further. So at this particular point, we're looking at the U.S. dollar is trading at 96 cents. The important number is $1. It's par. And there are buy orders in the futures market above par that will send this market reeling. If you go back to the 90s, you'll know what I'm talking about when the U.S. dollar was trading at 108 and 109. That's a huge move from where it is right now, but I'm very comfortable with the fact that the U.S. dollar is going to make a massive move on the upside, and other currencies are going to fall. In actual fact, when they say the currencies are down, they are comparing it to the U.S. dollar, which is, the most important currency, the reserve currency at this point. So what we're looking at in the markets right now, it was just about 2 weeks ago that the price of gold went from $1,080 up to $1,160. We saw a huge move, about an $80 move in a very short period in gold, and a lot of people were convinced at that point that gold is out of its bear market and getting ready to rally, and that was primarily because we are seeing so many problems in China. They devalued their currency twice in 1 week. On top of that, we also saw that their stock market is in shambles, and they closed the market, they suspended trading, then they bought stocks back for billions of dollars. The Chinese market had the biggest one-up-day move, and then it started plummeting again. I have Chinese clients that cannot even get their money out of the market. That's how severe that situation is. Similar situations are happening in Europe. Again, we're concentrating right now on Greece, but the fact is that there's 4 or 5 countries right behind them, and again, the euro is going to continue to fall. So my strongest recommendations at this point are to get some money into U.S.-based investments, and I can help you with that. Very conservative investments, not investments that are going to put you at risk in any way, shape, or form. So if you're looking to do better than you're doing right now, please give me a call, because I do have some programs that are based in U.S. dollars that can make you an awful lot of money. So as I had said, gold had gone from 1,080 to 1,180, 1,160 in a very short period of time, and this morning, which we're taping the show on Thursday, the market hit 1104. So we've seen a $55 retracement in the price of gold. Most analysts were saying that the price of gold was going to break out due to these situations in Europe and China. But again, you've got to understand that the most important factor when it comes to gold is the U.S. dollar. And when the U.S. dollar is strong, gold is going to fall. When we started recommending gold back in 2000, about 15 years ago, the price of gold was at $250, but that was because the U.S. dollar was just coming off a gigantic run up where it put it over par, and again, during the 90s was trading at the 108, 109 level. We bought gold at $250, and gold started to take off as the U.S. dollar started to fall, and the U.S. dollar fell from 109 all the way down to 72 cents. So from 109 to 72 cents, the impact on gold was $250 at the bottom and all the way up to $1,900. So that's how much effect gold and the U.S. dollar have on each other. I'm 100% convinced that the U.S. dollar is going to continue to rally, so that tells me that for the short term, gold is going to fall. There's no doubt in my mind that we're going to see $1,000 gold within the very, very near future, and if $1,000 doesn't hold, it could fall further than that. However, there are enough fundamental situations in the market, and there's been enough manipulation in the market that when this market is ready to turn, and again, I believe that we will be the ones that will determine and let you know when that's going to happen. There's no doubt in my mind that we're going to see new highs in gold. We saw gold almost up to 2,000 in 2011, and then we know that the exchanges and the government basically and the world banks made gold fall down. We've talked about that many times. So we know that gold has been manipulated, and when gold was at its highest level in 2011 at $1,920, the fundamentals for gold were tremendous. There was no doubt that gold was going over 2,000 if they didn't raise the margin requirements 5 days in a row. So basically, what we're going to see, because this market has continuously been manipulated by the banks, there's going to be a time when this market gets back on track, and it's just going to skyrocket. I do not believe it's going to be the same type of orderly bull market that we had back from 2000 all the way up to 2011, which was an amazing, amazing bull market. I think this bull market is going to be much more severe. We're going to see days where gold's going to go up $100, $200, $300, even $400 in a day. And we will definitely let you know when we feel that that is going to happen. But there's no doubt in my mind that gold has got to fall first. So again, if you're leveraged, if you're financed, if you're anything like that, and a drop to gold, a drop in gold to 1,000 or in the 950 range is going to hurt you, you better prepare for that, because that is going to happen and probably happen before the end of the year. Now, silver is up 19 cents today. It's trading at $14.90. Silver's been beaten up way more than gold has. Gold hit a high of 1920, and it came down to 1,080. So it didn't even fall 50%, where silver hit a high of 50 and is trading right now at around $15. So you can see that silver has dropped more. However, there's going to be very strong potential for both. There's a shortage of gold, there's a shortage of silver. As silver and gold prices fall further, the mines are not going to produce gold and silver. They're not going to produce gold and silver at a loss, unlike oil producers that are producing oil at a loss. They're not going to produce gold and silver at a loss, and that's going to create an even larger shortage, and that's when we're going to see this market take off. Now, there's one other thing, and I don't want to confuse you about this, but this is very, very true. There will be a point when the U.S. dollar is still strong that gold is going to rally. It's going to rally very strong, and it's going to shock the market. And this happened in 1980, a similar situation. Gold had gone, was rallying, and then all of a sudden, inflation was a major factor. So they started to raise interest rates substantially to deal with a very high inflation factor. Inflation was why gold was going up in the first place. So they started to raise interest rates and raise them and raise them and raise them. And most of us that are in our 50s, 60s, and 70s remember 1980s when the mortgage rates were over 20%. So even though they raised interest rates and the U.S. dollar started to strengthen, gold made a run to 850 because it was because of inflation that was making gold run. And I do believe that we are going to see the same thing again. It's going to be one of the most exciting and massive bull markets that we have ever seen, but the timing is going to be very important because it's not going to last a tremendous period of time. It's going to be a very, very fast run, and we want to make sure. Now, I've been talking for the last 6 months about us being able to bring to you gold, physical gold bars, kilo bars, at spot price with no commissions, and that's about a week away now from happening. We just got called to New York. We signed the final papers as far as our importer's license goes, and again, we're going to bring the most magnificent, solid gold, beautiful bars that are actually minted in Ohio, and those are going to be coming to you probably within the next 30 days or less. So we're ecstatic about that, and the timing is going to be excellent. Now, silver's trading at $14.80, $14.90 right now. It was down as low as $14.55 this morning. If gold ends up going down to $1,000 or $950 in that range, how much further can silver actually fall? I'm looking at $12 to $12.50. I don't think that silver's going to fall as much as gold because silver has fallen so much already. Platinum is at $989, so gold has taken over and is much stronger than platinum, and palladium's trading just under $600. Then we've got the Dow, which has been dropping almost every day. We're at 6234. There's a lot of bearishness in the Dow. However, we know it's a manipulated market, and there's no doubt in my mind that the Dow is going to rally. The Nasdaq is down again today. It's down to 4755. It did break over 5,000. The TSX is trading all the way down to 13,545. Again, it's not a good thing because the Canadian economy, unfortunately, with low commodity prices and low oil, is going to suffer for a while. The U.S. dollar is trading right at 96 cents. There's no doubt that it's going to break par probably before the end of the year, and then with the buy orders above that, it's going to take off and run. And right now the price of oil is at $44, but there's no doubt again, unfortunately, that oil is going to fall, and that's primarily because Iran is getting ready to unleash a huge amount of oil. Even though they're losing money, Iran's been under some major financial issues, obviously, for the last few years, as there was sanctions imposed against them. So they've been out of money, they've been living in poverty, and now they're going to pump as much oil as they possibly can, even though they're going to be losing $30, $40 a barrel. So we're going to see a huge influx of oil coming back onto the market. It's going to bring down the price of oil to probably in the high 20s, low 30s, and that's going to hurt the oil market tremendously. So this is what I see coming up. If this helps you, you must prepare for what's going to happen, and it's going to happen fairly substantially and fairly quickly. If you don't know what to do, if you're confused and you need some help, believe me, I've offered this to you every single week, and many clients are taking us up on this because these are such difficult times. I'm here to help you. If you don't understand what's going on or you're concerned about where your money is invested, give me a call and we'll talk about it, and I'll see if I can help you. We have some investments at this point that are very conservative, that are U.S.-based, and can make you an awful lot of money and get you through some of the most trying times. So, Randy, that's the way I see the markets right now. I see a lot of fireworks coming up in the near future, and most of it is going to happen before the end of the year. So we need to be prepared for this, because we have an opportunity to, number one, protect what we have, but number two, make an awful lot of money.
Take Harold up on his offer. Call him, 1-800-432-1022. And any conversations that you have with Harold remain 100% confidential and private. 1-800-432-1022. Harold's website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. Our featured diamond is a 2.09 carat emerald cut, fancy vivid yellow, internally flawless. And any of the featured diamonds that we talk about on the show, usually after the show is done, they go very, very quickly. So if you're interested, connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. And remember, all conversations that you have with Harold about your personal finances situation remain 100% private and confidential at all times. 1-800-432-1022. One of the stories that Harold touched on is how tight the silver market is. And there were quite a few stories that came out this week about it. We have them in our newsletter. Greg Hunter, formerly of CNN, interviewed David Morgan, who is one of the top silver experts in the world, along with Ted Butler. And David Morgan said, prices of the white metal may be low, but demand is huge. Morgan explains, I did a survey of many of the top wholesalers and retailers in the country and came to the conclusion that the retail side of the market has basically seized up. One of the biggest mints in the United States is backlogged about 4 million ounces. You have two other main government mints that are basically on halt and not producing or trying to catch up. They have huge premiums in the silver bar market and extremely high premiums in the silver bag market, or what is referred to in the industry as junk silver. Dealers are paying about $5 above spot to source silver bags. What that equates to for the cost of silver is around $19.25 an ounce. And here we are in the mid-14 range, about $14.50, $15 for an ounce of silver. So obviously, there is a huge demand that cannot be met with the current supply in the retail market. Morgan says silver is an inflation-adjusted deal. He contends the average mine cost used to be about $22 an ounce, but with the oil price dropping, it's now around $15. In most cases, you are buying it for less than the best producers on the planet can produce it for. We are basically at the same price using the true money supply when it was $5 silver in the early 2000s. So if you're looking at all the fiat currency floating around the world and you use the metric, you're going to buy silver at the same price, inflation adjusted, as you were in the early 2000s. Also, Bill Holter, who now actually writes on Jim Sinclair's website, it's called the Holter-Sinclair Collaboration. He said in an article, you think silver premiums are high now? In fact, they've really exploded in the past few weeks. He thinks in the future, they're going to get much, much larger. You can read that article in our free weekly newsletter. Connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. 1-800-432-1022 or call, obviously, Harold, or connect with him on the website rarecoloreddiamonds.com. And Harold, we have about 4 minutes left in our segment, but that was one of the overarching themes this week in the material that I was reading, and you were as well, that there's a huge tightness, in particular in silver, but in gold as well.
Well, it's very true. And again, we have to understand the difference between paper, gold and silver, and physical gold and silver. Paper gold and silver, like stocks, is traded on exchanges, and it's very heavily leveraged. And again, it's heavily manipulated. We all know that J.P. Morgan and other banks have been manipulating the price of silver. And we know that there are very large short positions in the gold and silver markets and the futures market. Those don't exist in the cash market. So again, you're 100% right. There is a massive shortage, and it'll be even larger because of the state of the mines in gold and silver. And soon they're going to shut down. In fact, many of the silver mines have already shut down because it's costing them way more to produce than they're getting in the actual market. So there's no doubt in my mind that we are going to see a massive shortage. But as we continue to see these banks be able to put on massive short positions in the market, over the short term, it's going to force down the price of gold and silver. You know, this is the only market in existence in the world that this happens with. If there's a shortage in a very important commodity and demand is very high, the prices always go higher. That's economics 101. Why is it different for gold and silver? Because they're being allowed to manipulate it, and our government does absolutely nothing about them ruining a phenomenal and very important market. So I believe it's going to straighten out, and it's going to happen fairly quickly. But again, it's going to catch a lot of people with their pants down. We want to make sure that we're on top of it.
Our featured diamond of the week from rarecoloreddiamonds.com is a 2.09 carat emerald cut, fancy vivid yellow, internally flawless. If you would like to take a look at this diamond, go to rarecoloreddiamonds.com and click on the featured diamond of the week link. It will be happy to obviously show you the diamond. All you need to do is connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. That's 1-800-432-1022. One of the interesting quotes in our quote section of our newsletter this week, Michael Pinto coming out and saying, in 2009, the Fed was willing to provide all the wind for the market sales, and he's talking about the stock market. And despite lackluster worldwide growth, the stock market surged forward on zero interest rates and Federal Reserve money printing. For 7 years, there has been a huge disparity between economic fundamentals and the price of stocks. Now Yellen and the Fed are determined to remove the financial and final monetary accommodations that are included in the zero-rate interest policy. Even if they don't go far off zero, they have given a clear message to the markets. You are on your own now. That means the bear market in stocks has just begun. That according to Michael Pinto. Now, Rob Kirby, he was interviewed by Greg Hunter as well this week. Greg Hunter has a great website, USA Watchdog, and you can watch and listen to the interviews there. We have them linked in our free weekly newsletter. Kirby was asked about how bad things will get when the next crash comes, and he says, I think it's in the unwinding in front of us, in front of our very eyes. I think when it blooms in its full glory, it's going to be called a crash. It's going to be called the Dark Ages. Michael Pinto and Rob Kirby very concerned about the finances of the United States and the world. Hard assets, that's what we believe will be your insurance policy in your portfolio. Connect with Harold at 1-800-432-1022 or rarecoloreddiamonds.com. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September the 10th, 2015. Our time is 9:11 Mountain. Our radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. We have a podcast through iTunes. Type in the World Financial Report on Radio. You can subscribe to the podcast and obviously download the different shows onto your portable devices. And Apple coming out with some announcements just the other day about some exciting new products that they have, and you can listen to our radio show on there. Their new iPad Pro and the new iPhone 6S. So you can check those out. And I should mention, we have two websites where the shows are streaming live, archived, HESradio.com and rarecoloreddiamonds.com. HESradio.com, rarecoloreddiamonds.com. You can listen anytime you want if you do miss a show. Connect with Harold at rarecoloreddiamonds.com or speak personally and privately with him. conversation is 100% confidential. 1-800-432-1022, 1-800-432-1022. Our featured diamond of the week, and it is a big, beautiful yellow diamond, 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless. So our featured diamond, 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless. See it at rarecoloreddiamonds.com. Featured diamond of the week. And I did do some research. So far, we have not gotten any word on the Argyle pink tender for 2015. That should be coming here in the days and weeks ahead. Once we know more about it, we will let you know. And it was interesting this week. There was two, it's hard to believe, but two amazing diamond stories. And both of them were pretty far out there. Wallace Chan creates magnificent necklace from 507-carat diamond. Hong Kong-based jeweler, retailer Chow Tai Fook unveiled a heritage in bloom Thursday by renowned jewelry artist Wallace Chan. The piece was created with 24 D-color internally flawless diamonds cut from the Cullinan heritage and an exceptionally rare 507.55-carat Type 2A rough diamond. Type 2A means almost or entirely devoid of impurities. The centerpiece of the necklace is the largest diamond in the suite, a 104-carat D-color, internally flawless, brilliant round diamond with the highest possible grade cut grade of 3 excellent cut, polish, and symmetry. That according to Chow Tai Fook, making it one of the largest diamonds ever with these characteristics. And they go on to say that they paid about $35.3 million for the 507-carat rough diamond in 2010. The company spent 3 years cutting and polishing the diamond. We have a picture of the diamond necklace in our free weekly newsletter and a story to accompany it. And Harold, this is a beauty. They have really done something that is a museum piece, a work of art. And, that's the type of thing you get with rarecoloreddiamonds.com as well. We have some amazing museum piece jewelry, and I know that you offer it through your website, too.
You better believe it. That featured diamond is so rare, Randy, that the chances of seeing another diamond like that are pretty well slim to none. And here's the reason. First of all, the color of it. The color is the very best that you can get. It's the highest saturated color. It's vivid. And this particular diamond is a 10 out of 10. It's magnificent. On top of that, the clarity. It's internally flawless. Very, very seldom will you see a diamond like this internally flawless because it's very difficult to cut an emerald cut. An emerald cut diamond is also known as a step cut. There's different levels to it. It's extremely difficult to cut one, number one, and number two, cut one that's internally flawless. And then the size of it. The size of it is huge for that type of diamond because only one diamond in 15 million is over 2 carats, and I can guarantee you that none of them are like this particular diamond. So you've got a diamond that's over 2 carats, which is extremely rare. You've got the best color that you can possibly get, fancy, vivid yellow. You've got the best clarity that you can get, internally flawless. And then on top of that, the cut of it is ridiculous. It's a long emerald cut, and it is the most beautiful diamond you'll ever see. It's stunning. And a diamond like that will continuously go up in value like nothing you have ever seen before. We have other vivid yellow diamonds, but they're very, very difficult to get. In fact, those that own vivid yellow flawlesses should hold on to those primarily because you can hardly get them anymore, and the prices are really starting to increase. Now, there's something that's happening in the marketplace that's extremely important, and it has to do with the currency market. The thing is that I've always, over the last 10 years especially, always mentioned that one of the main reasons, aside from profit and protection and things like that you want to own a diamond, an investment quality diamond, is because of currency devaluation. And isn't it ironic that we're seeing all of that happen? Let's start with Canada, because a couple of years ago, the Canadian and American dollars were even. A lot of my clients over the last 10 years bought diamonds when there was no difference in the American and Canadian dollar. But now there's a 30% difference. So all of my clients in Canada that have purchased diamonds previously are up 30% just on the currency, let alone how much their individual diamond has gone up. And that's why we brought this market to you. It's a very safe market. It's a very profitable market. It does tremendous benefits for you. But here we're seeing that just without doing anything, the currency market has made us 30%. Now, I've mentioned many times over the last few months that the Canadian dollar is going to fall further. It's going to substantially fall, and that's because oil is going to drop and commodities are falling further. So what we want to make certain is that, number one, as far as my company goes, that I hedge the Canadian-American dollar, and I do that often. Because if I didn't do it, then it would put my clients in a very rough position because they would have to pay more for the diamond because of the currency. So I have a massive hedge on the Canadian-American dollar spread right now because we have a lot of orders going up to Canada, and I don't want my clients to get hurt by the currency. So here's what I'm able to do. Any of our Canadian clients only that want to get involved in diamonds, I will allow you to buy those diamonds in Canadian dollars. So that's going to save you 30% right now on the Canadian-American spread when you convert your dollars over. And what I mean by that is quite simple. I don't want to confuse anybody, but when I say there's a 30% difference between the Canadian-American dollar, that means that if you go to the United States and you want to get $1,000 US, it's going to cost you $1,300 Canadian. Just a couple of years ago, $1,000 Canadian was $1,000 American. Now it's $1,300 Canadian to $1,000 American. So what I'm going to do is eliminate that. You can buy a diamond at face value in Canadian dollars. So if we're selling it, for let's say $100,000 American, instead of paying $130,000 Canadian, you're going to pay $100,000 Canadian. So you're going to buy it at par with the American dollar. And the reason that I'm doing that is because I want my clients to make money. So I could either keep the 30% for myself, or I could promote business and give my clients a break, and that's exactly what I'm doing. So you can now buy our diamonds, our amazing investment quality diamonds, our yellow flawlesses, our argyle pinks, our blues, our reds, our greens, whatever, at Canadian dollars, and you will be in profits immediately by 30%. And that's what we're willing to do for you. And the reason that we can do it is because I hedge the Canadian-American dollar. Sure, I could be greedy and keep that money for myself, but that doesn't promote new business. And that's what my company is all about, promoting new business. Especially with the way the economy is today around the world, it's never been more important. Just look at this. How about the people in Greece? The people in Greece saw their whole economy collapse. Their currency, they were in the euro, they've seen that the euro totally fall out of bed. And soon they're going to be off the euro and back on the drachma, which means that these poor people in Greece are going to lose almost everything. They're going to lose 80%, 70 to 80% of their net worth. Now, while all these banks were closed for a month and nobody could get any money out of ATMs or anything out of the bank, if they had a diamond, it doesn't have to be $1 million diamond, it could have been a $20,000 diamond. They go across the border, they go into Switzerland or Germany, and they sell their diamond for whatever they sell it for. Doesn't even have to be a profit, because what they have in their hands now is money. Now they can get back into the game. They can do some business. They can pay some bills. They can put food on the table. They can get started again. But without an asset like a diamond, where you have that flexibility to go and sell that, you're dead in the water. If your currency falls and your economy falls, like is happening in Greece and other areas around the world, you need an asset like this. And who in the world would have ever thought that we would have been talking about the Canadian dollar that could be down 40 to 50% of what the U.S. dollar is going to be in about 6 months? How crazy is that? So if we know that this is coming, let's prepare for it. Call me. I'll show you how to do that. The other thing is that the diamond market is on fire. Look at what's happening in Venezuela now. Venezuela, their currency is worth basically nothing. I don't know how the people there are living. Their inflation is through the roof. Same scenario. If you had a diamond and you were living in Venezuela and you can't get out and you cannot buy anything and can't put food on your table, you've got a diamond. You've got a tangible asset that is portable private wealth that you can sell and get back in the game again. And that's what it takes. And you need those type of assets. So, again, this is what we bring for you. And our auction business, which we're going to do a ton of auctions going into the end of this year and starting next year, are just going to be phenomenal. So we're very, very excited about what's happening in the diamond business because it offsets a lot of the negative things that are happening in currencies and other financial situations around the world. We have a client in China that is experiencing all of his money in the stock market in China and in cash. The Chinese yuan got devalued 2 days in a week, and their stock market crumbled. On top of that, you're not allowed to sell large block orders of stock. He's been stuck in these positions for 2 months now. Fortunately, he owns some very, very substantial diamonds. Otherwise, this man that was worth as much as $500 million was in serious financial trouble. So this is what I'm talking about. That featured diamond today is one of the best diamonds you could ever possibly own, and we're going to be able to sell that to you or any other diamond on Rare Colored Diamonds in Canadian dollars, and then we'll put you up 30% right from the word go, and that's what we're willing to do for our clients in order to get them through some very difficult times.
Our featured diamond of the week, and just an exceptional offer from Harold to be able to invest in a diamond like this in Canadian dollars. The diamond is a 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless. This is a museum piece. It's stunning. You can see it at rarecoloreddiamonds.com, featured diamond of the week. One of the stories that we just mentioned to you was about the necklace that was created. And now the story that really, it's actually quite stunning. There was a birthday party and engagement party for a wealthy Arab girl and her family, obviously billionaires. They commissioned a cake to be made worth $75 million, complete with 4,000 real diamonds. The cake weighed a staggering 450 kilograms, the equivalent weight of a male grizzly bear, and the icing included a 5.2 carat pink diamond, a 6.4 carat yellow diamond, and a total of 15 5-carat white diamonds. This means that 17 stones alone were worth a staggering, and this is in British pounds, 30 million. So that would be around 45 million US, with another 4,000 stones that were a carat or more, including amethyst and emeralds included. The runway was encapsulated and adorned with 401 carat and 73 3-carat white diamonds and 75 3-carat black diamonds. If you want to read this story and see the picture of this amazing creation, $75 million cake that included a pink diamond and a yellow diamond, you can see it in our free weekly newsletter, Connect with Harold, at rarecoloreddiamonds.com, or give him a call at 1-800-432-1022. Remember, all your conversations are 100% confidential. But our featured diamond of the week, Harold, it may not be a part of a $75 million cake, but if you're starting a diamond portfolio, this is really the icing on the cake before you even start, because this is a stunning, stunning featured diamond.
Yes, thank you, Randy. You're 100% right. And, the thing is that most people cannot buy a $75 million cake, obviously. Are you kidding? But the fact is that a lot of people can invest in $20, $30, $50, and $100,000 diamonds that are much better investments than stocks, bonds, anything paper. Again, just by relating what we talked about, during the diamond section of the show, that you never ever know what's going to happen when you wake up in the morning and see what the markets are doing. All of a sudden, the investments that you're in may not be doing very well. And that's obviously a tremendous concern. There's nothing wrong with hedging yourself. To take out insurance. We all take out insurance. We take out insurance on our car, on our home, on our life, on our health, on everything. Why in the world would we not want to insure the thing that we work the hardest for, which is the money and our assets, in order for us to continue to survive and take care of our family? So all it takes is taking money from an area that is risky and not doing well and put it into an asset like a rare colored diamond that will preserve your equity, number one, which is extremely important in these days, not to lose your money, and then number two, to see that diamond or that asset appreciate. Now, if you invest in Argyle pink diamonds, I've never seen a better financial situation than that, because the mine that produces 95% of all pink diamonds is going to close before 2020. It's almost 2016, so that's only 4 years. It's less than you would put into a retirement savings plan. If you were to buy a $100,000 diamond or a $50,000 diamond that's pink from the Argyle mine with all the papers and everything, you could see anywhere from a 5,000% return on your money. We're expecting those type of returns. We're starting to see them now. So again, and we will sell to you in order for you to be able to get involved. Any of our Argyle pinks, any of our yellow flawlesses, any of our investment quality diamonds, we will allow you to purchase in Canadian dollars, which will put you ahead of the game by 30% as soon as you take delivery of that diamond. So again, we're doing everything in our power to make certain that our Canadian clients that are getting killed in the marketplaces right now. You know, in Alberta, the oil markets are down. A lot of our clients are out of work or suffering at this point, and that's the last thing in the world that we want to see happen. So again, if you're one of those people that are having a rough time and you just don't know which way to turn, pick up the phone and give me a call, and let me see if I can help you. If I can't help you, I'm going to let you know that, but there's a very, very good chance that I can. And again, we're all in this together. This is not a show for the Warren Buffetts around the world. This is for the everyday hardworking man and woman, the family people, the Canadians that just want to make the right decision and just don't want to get into financial issues. And believe me, there's a ton of them out there right now. So if there's any way that I could help, it would be my pleasure. And I'll sit down over the phone and talk to you for as long as you possibly need and explain everything to you and see if we could possibly get you back on track to sleeping again at night, because a lot of people are very worried about what's happening in the Canadian economy.
Well, we've just seen it so many times in the last 15 years. Stock markets plunging, two major pullbacks after 2000 and then during the financial crisis. And people are getting to a point where they just can't take it anymore, especially as they get closer to retirement. This week's featured diamond is a 2.09 carat emerald cut fancy vivid yellow internally flawless. See it at rarecoloreddiamonds.com or call Harold, speak with him personally, privately. An open invitation to talk to him at any time, 1-800-432-1022. And Harold was touching on the appreciation with your diamond when it comes to currency. But there now is an index, and we've touched on this before. If you missed it, it's the Fancy Color Diamond Index. And between April to July, the second quarter, the strongest performers were 1 carat Fancy Blue and 1 carat Fancy Vivid Yellow, similar to what we are offering today as our featured diamond. Now, both of them up 4% each. Fancy Vivid Blues up in the 3 to 10 carat range. They jumped to 4 to 6%, and a significant advance of 5 to 6% were noted in the 8 to 10 carat pinks, both intense and vivid. And one of the things that they touch on in the article we had in our free weekly newsletter is that really there is a diminishing supply due to the fact that the mines are shutting down. No new mines are shutting down. It's that simple. So you can make money on the currency, and you can make money with the diamonds appreciating due to scarcity as well. And don't confuse what's happening in the white diamond market, the everyday white diamond market, with what's happening in the rare colored market. They are very, very different scenarios. And Harold, here in the next few weeks, we should get an idea of how the Argyle Pink Tender did. We're keeping our eyes open for that news, and when we have it, we'll talk about it on our radio show. It should be coming out here in the next few weeks. And I suspect when we hear the news on the Argyle Pink Tender, there will be record prices for the diamonds that they offered, and it will set the bar even higher for those that want to get into the pink market today. So do not delay. If you're interested in a pink diamond or a yellow diamond, don't wait for the investment prices to go up. Act immediately.
And buy them in Canadian dollars, which puts you ahead 30%. The other thing is about the Argyle tender, there's no way in the world the tender was not records. There was phenomenal diamonds in there, and the fact is that these diamonds are going for a fortune. So the Argyle tender is the biggest event of the year in the diamond business. I'm positive it went very, very well. This is 2 years in a row that we really got shut out because, and most major dealers got shut out because the general public is aware now of what's happening with Argyle, and they bid the prices up so substantially. They're 30 to 40% higher than what they would have been 2 years ago. So that's how amazing these investments are in pink diamonds. I knew about the Argyle mine many years ago. Fact is that I started buying Argyle pink diamonds over 15 years ago, when nobody even really knew what was happening with the mine. So I know this business very well. We've got a tremendous selection of Argyle pinks, starting in the 30, 40,000 range and going up into the multi-millions. Most of my clients buy diamonds in the 100,000 range or less. So we could definitely help you. If you've got money sitting in a retirement savings plan right now, I can assure you, or money in the stock market, you're not making any money. And with what's going to happen with commodities down and the overall economy down, there's no way that the TSX is going up. So if you've got stocks in there that you're losing a lot of money on, I know it's difficult to sell something and take a loss, but think about it. You sell it, take a loss, talk to your accountant, maybe be able to write off that loss, but take that money and put it into an asset that's going to make you a lot of money. It only makes sense. I know we get emotional about taking losses on stocks or commodities or investments that we make, but sometimes your first loss is your best loss. Getting out of a losing position, recognizing the fact that that investment has no shot of making you money at this particular time, and taking it out and putting it into something that gives you a much better shot. And that's what we're talking about. The stock market right now is abysmal. There's no reason to be in it. The stock markets are supposed to be reflective of how the economy is, and if the commodity markets are down and oil is plummeting and Iran's going to pump a tremendous amount of oil, we know that the Canadian dollar is going to fall. We know that the Canadian economy is going to back off. So if you've got money sitting in stocks that you're losing in right now, give me a call. Let's discuss it. I've got 3 or 4 different investment opportunities that are all very conservative that could help you make a lot more money than you're making in the stock market or losing in the stock market at this point.
Well, and we see in China that they have pumped 236 billion, which is 1.5 trillion won, into the stock market to stabilize it. It's manipulated. There's just no getting around it, and obviously manipulation in the United States as well. And we had the quote last week from Jim Reed from Deutsche Bank, and it's worth repeating. One of the biggest problems we are facing is there is no historical template for current global market conditions, so we are all flying blind to a large degree. Never before have so many of the most important countries in the world printed so much money and left base rates at near zero for so long. Also, never before has the largest economy in the world, the United States, tried to start a slow process of reversing said extraordinary policy. This is literally, there is no precedent in the whole of human history to help guide markets through what they're experiencing. And Jim Reed from Deutsche Bank saying, we are flying blind to a large degree. And Harold, that is not a good way to invest. You need to have an insurance policy in your portfolio of hard assets, diamonds, gold, and silver. And if you would like to learn more about our featured diamond of the week, diamonds in general, go to rarecoloreddiamonds.com. Rarecoloreddiamonds.com. In August, it celebrated its 10th anniversary. Rarecoloreddiamonds.com, featured diamond of the week, a 2.09 carat emerald cut, fancy vivid yellow, internally flawless. And Harold, we have about 15 seconds left here.
You bet. Randy, I'm very excited about it. Cautious. Again, there's a lot of reason to be cautious right now, and all we want to do is be conservative and not speculate, and we're going to come out ahead. So, again, look into the diamond market, and again, because we hedge this currency, you can buy our diamonds in Canadian dollars. That will save you 30%. That's 30% in your pocket. Very happy to do it.
Harold, thank you for your knowledge and another great show.
My pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Don't fly blind. Now is the time to take action, learn more about hard assets, have an insurance policy in your portfolio. rarecoloreddiamonds.com. Connect with Harold personally and privately, 1-800-432-1022. That's it, another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.